Do you want to learn how to save money on your monthly mortgage payments, whether you own a home or buying a home? Hey guys, Patrick John of eXp Realty, part of the Johnson Group here in Port Wentworth, Georgia, specifically Rice Hope, where I live. I figure since I live here, I do a little service, show you what's on the market, what's sold, and what's active, contingent, and under contract. And then after that, I'm going to get Christina Boyette to come in and talk to us about how you can save money monthly on your mortgage payments, whether you're buying or you already own a home. So you don't want to miss that. But first, if you can do me a favor, you give me a like, share, subscribe to the channel. Really helps me out. I really appreciate it. And let's just jump into the neighborhood. All right, so here's our neighborhood. You see Parkside, Lakeside, obviously with the big lake at the back. But from this picture, you can just immediately see there's 4 homes that are active on the market right now. A few of them we went through before, but they got updated pictures in there for some of them. So fantastic. Make sure you share this with your friends and family if they're looking to buy in this area. Now you know exactly what's on the market. There's also 2 under contract or active contingent. I had explained that in the last video, but these 2 are the 2. But this one is once again in Bloomingdale. They have not fixed that yet. And then you had 3 sold in the past 30 days. So that's fantastic. But let's just kind of go through what's going on here in Lakeside first. So before, if you saw my last video, this one was on the market. It was 31 Mossy Cove or Mossy Oak Cove, 3 bedrooms, 2.5 bath home. And it's identical to the other one that's actually active. But yeah, this one is under contract. So basically, what it means is they're waiting for the all the due diligence and inspections and everything to be done, and then all the financing stuff. Once that's done, it will be sold. So let's see here. Let's go look at the ones that are actually on the market. So this one is an N unit, and if you had watched my last video before, typically N units are more expensive. Part of it has to do with you got to have windows. There's different things that have to be on an end unit that doesn't have to be in an interior unit, so it costs a little bit more, so they charge more. So let's check this home out real quick. This is 23 Mossy Oak Cove, Port Wentworth, Georgia. 3 bedrooms, 2.5 baths, 1,723 square feet, offered at $285,000, and this is by Amy Schumann. And let's look at this home again really quick. All right, as you can see, beautiful living room area, opens up to the kitchen, stainless steel appliances, granite countertop. So that's great. I like the subway tile. And then if you come through upstairs, there's a nice loft area. Look at that. You can have actually like another living room upstairs. That's fantastic. Granite countertops in the bathroom looks like. Let's go to the primary bedroom here. Look at that. Tray ceilings, big enough for a king size bed, no problem. Plenty of furniture, and it has a primary bathroom with dual vanity, granite countertops. So that's fantastic. Separate shower and tubs. So that's great for townhome. I mean, 1,700 square feet. That's a big townhome. So that's great. All right, and then let's go over here. So this is a good one because what I saw earlier. This is 200 or 233 Clearwater Circle, 4 bedrooms, 3.5 bath with 2,664 square feet, offered at $340,000. That's a huge house for $340,000. It's steal right now, actually. Also, I want to point this out: the seller is contributing $5,000 towards closing costs for interest rate buy down. Now, Christina, at the end of this video, is going to be actually talking about that. So this is a great thing and help you with your interest rate, your payments. Fantastic during this crazy time. But let's go through these pictures real quick. All right, nice large living room, dining room area, and then they got the look at that dining room, tray ceilings, wood floors. Love that. And then the kitchen's wide open, as you can see. You can add a bar in the middle. I don't think that's going to stay, obviously. And then look at this shot. You get to sit on your porch up top. This is one of my favorite parts about this neighborhood is that you got the balcony up there. You can see over outside, which is great for drinking coffee or, just chit chatting. Fantastic. But let's go check out did we get to the primary bedroom on this one? Let's see. Here it is, primary bedroom. Okay. Let's go back real quick. So it looks like it's got enough room for a king size bed. So that's great. Okay, and then it goes into the bathroom. So shower tub combo. So that's good. That's good. All right, 2,664 square feet. Oh, that's huge. So let's check out the other homes here. This one is new construction, but also they updated the pictures, so that's fantastic. So this is 135 Moonlight Trail, 4 bedrooms, 3.5 bath home, 2,700 square feet, offered at $529,000. New construction. Check this out. This is a beautiful home, actually. Look at these new pictures. Hold on. Look at this. Hold on. That's not new. Hold on. They were new. There we go. So we got the kitchen. That looks the same, but it's a lot more finished. So watch as we go through the home. Look at that bathroom. Upstairs. All right. I'm trying to get to the primary bedroom here. Hold up a second here. Well, that's the living room again. Look at that closet. Oh my goodness. Look at that. I mean, beautiful. Look at that bathroom. Corner shower like that. 2 different vanities right there. That is fantastic. I love that. All right. So that is 135 Moonlight Trail. And that is Lakeside. Let's go to Parkside. And there is really only one. And this is, like I said, the one right behind my house. This is Rodney Rawls from Rawls Realty. 110 Burt Circle in Port Wentworth. 3 bedrooms, 2.5 bath, $295,000 with 1,588 square feet. So let's check this one out. All right. Let's look at the pictures. I mean, the area is great. I mean, when you talk about where this is, if you look at the backside, you can go into your garage, which is great. And the front is right out off the entrance. So you turn in to Parkside, you take that immediate right after the dog park. It is right there. So you're easy in and out of the neighborhood. Not like it's hard to get in and out of the neighborhood, but you know what I'm saying. But look at that space. I mean, it's just massive space on the bottom. Subway tile. It looks like there's no refrigerator coming with this, or dishwasher, or any appliances actually. So keep that in mind. Huge garage. And then the bedrooms are going to kind of look the same. With no furniture, it's kind of hard to see, but that is a big primary bedroom right there. Look at that. Then there's a separate shower and tub right there. But yeah, there you go. Let's look at this. So I'm going to pull up the CMA I did for the neighborhood so you can kind of see what's going on. So once again, 4 homes on the market right now. The median sales price right now is $317,500. Median price per square foot is $175.59. And now what this is kind of like your Zestimate. You take your square footage times that number, and you kind of get a ballpark of where you're at. So if you're trying to look at your value, you can do that, or you can give me a call. I can help you out. And then average days on market, or median days on market, is 46 days. And then we're going to go to active contingent. Once again, active contingent means that there's some contingencies that the buyer has to fulfill, such as due diligence, finance contingency. So that's why it's contingent. 2 of them is the median sales price is $296,750. Average, or the median price per square foot is $186. For those are active contingents, so that's different than the active. Okay, as you can see, big difference between active contingent and active. And then 44 days on the market. And then we're going to go to the under contract. That's 221 on Parkside right there. And it's $360 or $360,000 at 171 per square foot. Average days on market 38. Okay, so that is what's going on in our neighborhood. Now let's talk to Christina to see how you can save money on your mortgage. So now we're going to talk about how you can save money on your monthly mortgage payment regardless of your interest rate. And today I got Christina Boyette from New American Funding with me. Thank you for coming. I really appreciate it.
You're welcome.
And she's going to talk to you about how you can lower your monthly payment regardless if you're buying or you own a home. So Christina, what do you think your best advice would be for someone you're talking to immediately reduce their monthly payment?
Well, the quickest thing to look at would be homeowners insurance, because homeowners insurance from one company to another can be an extreme difference. Some companies, they look at the client And if they've made claims and they look at credit score, it's a different kind of credit score, but they do pull a credit. And then some companies go off the house itself. Oof. And if the house itself, that person, made 3 claims, you're going to have probably higher insurance. So you'll want to check from place to place and get at least 3 quotes.
And so if they bring you like these 3 quotes, can you help them out with that situation?
Yes, I would love to help them out with that. And sometimes I even call the insurance company if I see that it's a little bit high than normal. I can ask them, what's going on here? What can we do to fix this and make it a little cheaper? So that really does help. Sometimes it's just a roof is old and needs to be repaired, or you could even, if you live by a fire station, that might give you better insurance.
Nice. The fire department can get there quicker.
Yes.
Love that. All right, fantastic. We were talking about PMI during the open house this Sunday. Right. And can you explain to everybody what PMI is and how you could potentially reduce your monthly payment using that tool?
Yes, PMI protects the lender. It's insurance just in case you default on the loan. So that amount you can make it cheaper by paying more on a down payment.
When you're buying, yeah.
Right,
okay.
When you're buying. So if you put down 11%, let's just say 11% versus 5% on a conventional loan, that's going to make your PMI a little bit cheaper than it would normally. Or you could pay the 20% and avoid it altogether. But a lot of people don't have the 20%.
And
so
PMI is like $100 to $200 extra a month, right?
Yes, it can be pretty high.
And it doesn't help you at all.
Not at all.
So what if you own a home and when you bought your home, say like 4 or 5 years ago, and you put down your 3.5% for an FHA loan, for instance, could they have it removed later?
Well, with FHA, if you don't put 11% on the loan, you're going to have it for the lifetime. So this would be conventional. But you can refinance out of an FHA into a conventional and then not have the PMI.
Hopefully. Okay.
But yeah, but that's a whole different story. So if you want to try to remove the PMI and you have a conventional loan, I would call your lender, ask them how they handle it, because each lender handles it a little bit different, and it depends on the product that you have, like FHA or Fannie or Freddie. But typically, especially now with the increase in the homes, you may have enough to remove it. You may just, get an appraisal and show the lender that you're under that 80% threshold, and they can remove it.
So they have conventional loan and they're under 80%, or say they have over 20% equity in the home, then they can have it removed.
Right.
So I can tell you what, I can help you with that. If you guys have been in your home for a while and you put down the minimum down payment, give me a call. I can do a comparative market analysis for you. You can tell you if you are past that 20% threshold, and then voila, save you $100 to $200 a month.
Yeah, that's a great idea to call you first, because you don't want to pay for an appraisal. No. That's could be $575 or $650, and
to find out you're at 19%.
Yeah. So call you.
Yeah, give me a call. I give you a CMA. No problem. It's too easy for me. Okay, I do it all the time. Okay, so when people are buying a home, I think people understand that the better the credit score, the better the rate, right?
Yes, especially now. Yes, credit score makes a difference on that rate. So you want to try to call your lender, which hopefully is me, a couple of months before you're really interested in purchasing another home. That way you have time to, if there's something that we can fix, you'll have some time to be able to fix it.
And how do you find out, how do you help them in that regard? So I come to you, would you do a soft pull, hard pull?
Yes, we have a soft pull. So it won't affect the credit score at all.
Nice.
And I know. And we have this system that will allow us to pay off bills or add debt or pay down debt, all kinds of things that we can manipulate it. And
kind of like a simulator?
Yes, and see what your credit score would be, and it'll tell us how long it will take us to get to that credit score.
Oh, that could save you a ton of money.
Ton of money, ton of time, too, because I have this system. You don't have to go searching and try to figure it out yourself, because it can be confusing.
Yeah. And you'll know exactly from the lender that you're going to get the loan from anyway. So what does it matter anyway? Just give her a call a few months in advance, maybe 6 months, maybe a year. It depends on you. And maybe you'll find out if you call Christina, she does all this stuff. You'll be like, oh my God, I'm closer than I thought. Have you ever found that with people before?
Yes, I have.
Yeah, a lot of people don't think they can afford to buy a home, and then all of a sudden they go talk to the lender and poof.
Or they've already talked to the lender and they say, oh, we can't help you out because your credit score is too low, and they didn't take the time to educate. And sometimes it only takes like a month or a couple of weeks to make your credit score jump up.
Oh, wow. Give Christina a call. She can help you out. Check this kind of thing. So another thing you told me, I didn't even think about it. I had read about it, but I really wasn't thinking about it, was the 40-year loan.
Oh, yeah.
Can you tell us about the 40-year loan? Because I know everybody's heard about the 15. Well, 10, 15, 30, is that what it is?
22.
20. So there's a 40 now. So can you talk about that a little bit?
Yes, there's a 40. So the beauty about the 40 year is that it does extend it so your payment is lower. But it does come with a little bit of a higher rate than you would on a 30-year or 15, because it's a higher risk. They're going to have you for a much longer time, and so but that can lower your payment, and that is a way to have a lower payment,
because they can you're just spreading that extra money across another 10 years, so potentially saving you $50 to $100 a month, depending on the size of your loan and all that stuff. Okay, so I talk all the time about this, when you're buying a home, a temporary buy down for, if you're a buyer. So can you talk about how that works? If I'm buying a home and I'm like, okay, I want a temporary buy down. Can you talk about a 2-to-1 rate buy down or how all that works, please?
That is great. The buy down is wonderful. And so what happens is the seller pays for it. So you don't even pay for it. So there's several different kinds, but I'll just talk about the one that we use the most is the 2-to-1 buy down. So it buys the rate down for by 2% on the first year. The second year is 1%, and then the other years is at wherever we lock the rate. So it's a temporary buy down, and the theory is to help you out until we can refinance it into a permanent lower rate. But that buy down, the first year, I'm seeing it saving people $400 a month, and then the second year, $200 a month.
Wow!
So it's big savings. It's not little.
And then, like you said, the theory is hopefully in 2-3 years refinance, and you can go down there permanently, right?
Right.
Right. Okay. Cool. And let me ask you: say, for instance, I'm in a 2-to-1 rate buy down, and rates drop dramatically after my first year. Can they refinance at a lower rate?
Yeah, they can definitely refinance at any time. It doesn't prevent them from refinancing.
There you go. So now you're talking about you can take advantage of it when it's high, and then if it comes down low, you just refinance, no problem. That's pretty amazing.
I know.
Now, you also told me something that I don't even think about. When we sell the homes, we go through the attorney, and he tells us about the Stevens Day and all this stuff. Can you talk about that? You're telling me something interesting I didn't even think about, but what were you saying?
Well, we do refinancing. So I see, property taxes all the time. And I know at the time that clients purchase the home, the attorney does go over the Stevens Day Act. And what that does is it stops the taxes from increasing as your home increases, because the values are increasing. You don't want to keep paying the higher amount each year. You just want to pay the lower.
Right.
So so much is going on at that table, and so many signatures, and they're moving that I see a lot of times they never go and do it, and you have to go and apply for it. You actually in person.
Right.
You have to show proof that you live in the home. So you'll want to call wherever you live and see what their requirements are. But yeah, don't forget to do that, because that really saves a lot of money.
And the tax money, which no one likes to pay tax money anyway. So.
No, and it only goes up. It doesn't go down.
Right. So lock in your value so that you're only paying for that value. Even if the millage rate goes up and there's more taxes, you're still getting taxed at your the value that you bought the home at.
Exactly.
But Christina, I really appreciate you helping save our clients money and every month. I mean, I know it's hard out there with interest rates so high. People are just looking for a way to save some money, and inflation's just out of control. But I want to thank you guys for watching and thank Christina for coming. And if you guys have any questions, you can call Christina down below. If you want to just tell them, what's your number?
912-433-3960.
And listen, you don't have to remember that. I'm going to put it right down below. But like I said, if you guys got any value, please like, share, subscribe. I really appreciate it. And I'll talk to you guys soon.